All right. What's up, everyone? I am not muted. At least I hope I'm not. Let's look at the audio working. Testing. Yep, looks like it's working. Let me know in the comments if there's any issues with the audio, the video, or anything like that. All right. How are you guys doing? Hope you're having a good, if you're in the US, a good Thanksgiving day. It's Thanksgiving Day now. It's like Thanksgiving yesterday, and then it was Thanksgiving Day today. I don't know like how that works really, but happy Thanksgiving for those in America, and happy normal day in rest of the world, or happy whatever holiday you're celebrating right now. I am celebrating the taking profits on the S&P 500 long day for me. Very nice. Made a I actually did close a big part of this position. Just have a very tiny position left on this one. I made big percentage. I think on this one 30%. I risked a shit ton on my personal account, if I'm gonna be honest with you guys. It's a little bit too reckless. But you know, when you got conviction, when you have like a strong conviction on something, and this idea for me, I feel like this was one of those ideas that come along, you know, once a year. All right, so we got people coming in here. Welcome everyone. Now for the giveaway, we're gonna do a giveaway today, but the giveaway will be sent out in email to everyone that signs up to the event. So if you have signed up to the event, your email is collected in the back end, and if you have not signed up for the event, you go to the link in the description of this video. Let me see if everything is set up. If this is actually here. No, it's actually not. So I have to add that this description of this video, and I will do that right away. All you have to do really is to go to rlztrading.com. So let me just add that. I'm just adding the link in the comment section, but all you have to do is you go to rlztrading.com and you sign up for the technical trading event, and that will make you eligible for the giveaway. And we're giving away lifetime access. We're giving you lifetime access to the community, to the RLZ Slingshot. We're giving away monthly access to the RLZ exclusive community as well. And I will send out the giveaway link after this webinar, and then I'll send out the I'll draw the winners on Monday. So Monday you will be getting an email if you have won the giveaway, and I'll be sending out the giveaway link after this webinar. You know what? I'm going to be sending out the giveaway link tomorrow so that you have enough time to actually sign up. And if you're watching the replay, I'm going to give you enough time to actually sign up for the giveaway, because it is a pretty decent giveaways. I want to make sure that everyone get into that one. Okay, I'm gonna get some water. I'm gonna get some coffee as well. I don't have the coffee. Yeah, I did. Have I disappeared from Discord? I have not disappeared from Discord. I am still here. Did have some issues with I did have some issues with my connectivity yesterday though. So my ISP, my broadband deliverer, or whatever that's called, decided to make some upgrades, which means it was down most of the day yesterday. And then obviously I don't have Wi-Fi on my trading setup. I have it all, you know, through wired, which is for me, you know, safety measure, because if I'm on you know, wireless, it can you know, connection might not be as good. But I'm gonna be getting a wireless adapter so I can use the wireless as well, and I have backup connections. I can also, you know, I have two different backup connections, because, you know, if you're, let's say you're trading, and this is actually quite important. It's not something that I talk a lot about, but imagine you're trading, imagine you're scalping, or imagine you're just trading, right? And you enter a position. Let's just say one scenario, right? You enter a position at market, and you're gonna go in and you're gonna adjust the stop loss of that position. Right when you enter that position at market, your internet dies. and you don't have a stop loss. And what if it's a tight stop loss? You don't have a it's, you know, you plan to put in a tight stop loss, maybe it's 5-10 pips, something like that. You're risking 1% of the account, and the market starts moving lower and lower and lower, and your internet dies. And now you're seeing that there's news coming out that, you know, the escalation in Ukraine is getting, you know, there's escalation in the war, and you're long, you know, your USD, or you're short the dollar or something like that, right? And then that absolutely dumps the market. Now you can lose your whole account, you know, on an event like that. So having backups is very, very important. Now, of course, most of us have a mobile phone with connection, so I do highly recommend that you set up your, like, you get MetaTrader on there, you get everything you need on the mobile phone, and make sure that you know how to calculate your risk on there, and you know how to enter orders and stop loss and all of that on your phone, so that will be your backup. So I have two different backups. I got my I got two different broadband connections and my phone, because I've had problems with that in the past. I make sure that I have everything set up for that. Super, super important. And you know, one way that you want to do that as well, if you have your trading station, your work PC connected through Ethernet cable, and you have a phone, then of course you can just share your, if you have Wi-Fi hotspot settings on your phone, you can share your internet, your phone internet, with your PC if you have a wireless Wi-Fi receiver on your PC. So that's probably the most simplest way of doing it. It's not something I'd recommend you do. It's something that you need to be doing, obviously. And if you are perhaps in a country where, let's just say, I have bad internet connection, then just make sure you don't enter a position without fixing that stop loss before you enter. Just getting everything set up here before we start, and we got more people coming in here as well. By the way, guys, I do see that some of you have already signed up for the using the Black Friday deal, and that's awesome. Thank you for supporting me and signing up for the deal. For those of you who are still on the fences, make sure you do sign up now if you're thinking about signing up, because I promise you, you will never get a deal like this ever again. To have me as your personal mentor to help you out in your trading and really take you through the journey of getting funded, like, that's my mission here, okay? And if I see that there's coming in too many people in the community, I'm gonna shut it down. I'm gonna shut it down because I want to make sure that I can pay attention to every single one of you, okay? So there is plans, huge plans going forward for this community, not only for me, but I'm thinking about, you know, building a plan, building a team here, building a future, really creating a machine that creates funded traders, okay? So with the yearly deal, you'll get this for, depending on sales taxes, local sales taxes in your country, you're going to get it for between $12 and $15 a month on the yearly deal with this Black Friday deal. Now, think about that. The price right now is $49 a month. You can get it for $12 to $15 a month, and we will increase it after Black Friday because we're making huge changes to the community. You're never going to get a deal like this again, and I'm sure you're going to be watching the replay next week or in a couple of months and say like, ah, damn, I wish I joined at this time. So if you do have any questions on anything that I'm talking about today or the community, please let me know. I will gladly help you out. Okay, let's start here. So again, what we talked about is, so for the question, I'm gonna combine yesterday's planned content with today's planned content, because today really what I wanted to do was like a smaller live stream talking about the community and talking about the giveaway, but I'm just gonna combine it all here. So on Monday, we obviously talked about the fundamentals of technical analysis, and not just the fundamentals of technical analysis, but my foundational principles of technical analysis. Basically, it's what the tools I'm using in trading, basically. And then on Tuesday, the RSM method, trend following system. On Wednesday, the basics of the RSM reversal, which is just a reversal system, you know, and where we combine the daily and the 4 hour, but you can of course combine any time frames because it's fractal in nature, and that's the beauty of trading this way, trading with you know, the fundamentals of TA in mind. You can trade basically any type of trading style, any time frame you want. It's not limited to a specific type of trading style. Well, style I would say, but not time frame. So today I want to go through the markets. I want to do some scanning of the overall market here to show you how all of these principles are put into motion. And while doing that, of course, I'm going to explain live what I'm doing. After that, we're going to talk a little bit about trading psychology, how I view trading psychology, and I'm going to keep it simple. People often overcomplicate the whole idea of trading psychology, and I will keep it very simple. I will explain it in a way where you don't really have to make a big deal out of it. It's super important, but you shouldn't be too focused on trading psychology. It's like when you have a problem. I mean, when you have a problem in real life, in your personal life, you should, of course, talk about it, right? But talking about your problems too much and being too negative and thinking in too much of a negative way and thinking about trading psychology and trading and always saying like, being too hard on yourself, being too negative and looking at trading as something purely emotional where it's just you're just making mistakes and you're constantly thinking and talking about that might actually make it worse. So you have to find the balance, and you have to find I will talk about that later. Very, very important stuff. But I also recommend 2 books that I recommend that everyone read. You need to read it. Like, that's just one of them. And I think most of you watching here know which books I'm talking about, at least one of them. And then I also want to briefly touch upon the aspect of fundamental analysis. Not fundamental analysis as you go read Bloomberg or you go read economic reports and you make a trade idea based on that. I'm talking about macro analysis using technical analysis. I'm an expert technical analysis. I'm not an expert at fundamental analysis. However, I'm an expert technical analysis, which means I can look at the markets from a technical perspective using different technical indicators and using correlations between different charts to give me a macro outlook of where I think the market might be heading in the next minute or the next year or the next month, right? So I'm going to show you a couple of secrets, I should say, on how you can apply technical analysis to the market. And in doing so, you also create a macro outlook and you basically do fundamental analysis with technical analysis. Okay, so let's begin by looking at which one is this? This is that one. Okay, let's look at the markets here. Let's go through the markets, and I will add some levels. I will mark out some market structure. I will add some levels, and I will explain everything in detail on why I'm doing it and exactly how I'm doing it. We're going to start with a clean chart here. We're going to go to Euro USD. We're going to remove everything we have here. Wow, that looks absolutely beautiful on Euro USD. That looks like a possible double formation on Euro USD. I'm thinking about building long positions here, and then we're thinking about, I'll talk about why I might not, why that might not be a good idea, why I think it might be a good idea, what kind of, what ideas do we have here that goes against the idea of going long Euro USD. Give me a second, I'm just going to answer a message here. And please, if you do have any questions on anything that I've covered today, please let me know in the comments and I will help you out with everything when we do have the Q&A section of the live stream a little bit later. Okay, so what we do first is we're gonna get a overview of the market. I'm gonna apply my basic technical analysis foundations here on the market, starting using a top-down analysis, and then we will apply both the trend following system RSM method and the reversal system, right? And now you have to make a choice. Are you going to be laser focused on one way of trading, or are you going to be a little bit more fluid, a little bit more discretionary? Now, I would recommend that you stick with one system, stick with one approach until you know the ins and outs of that way of trading, and you've been trading it for at least, depends on what your plan is. If your plan is to stick with that one system, you want to be trading it for a couple of months before you really understand it. If your plan is to combine different ways and be a little bit more fluid and have a more of a discretionary way of trading, then at least, you know, trade that system for 1 or 2 months. Go on to the next system, trade that for 1 or 2 months, or however long you need to feel comfortable in that system. And then you start looking into other directions. You're like, well, how does this indicator work? How can I apply this indicator to my trading? What about the European Central Bank versus the Federal Reserve when it comes to interest rate changes? Is there any correlation between that and the currencies? And you start building ideas and you start building your personal profile for trading. What I've given you here throughout this week is a framework, okay? That it's a stable foundation to build upon. We're building a house here, right? And I'm giving you the foundation. Without a proper foundation, that house of cards is just going to collapse. And I wanted to build a solid foundation, to build a nice house. I want your whole family to live in that house. And I don't want your family to, you know, I don't want the house to collapse on your family. That would be catastrophic. Okay, I'm not sure where I'm going with this. Well, actually, I'm quite sure where I'm going with this. That's your trading account. We don't want that trading account to collapse, basically. So this is the foundation that we're building right here, okay? So we got USD here on the weekly. What do we do here? We add a couple of levels, right? We're going to add a horizontal level here. I like that on the weekly. It's a good weekly level. We're going to add maybe that one right there. It's here. Looks good. We want to add a level down here. Why do we want to add a level here? Because I like that level. And again, I mean, adding levels, it's just subjective, right? It's just I like the level, so I add a level there. It's not like I go with any universal, you know, truth when it comes to adding horizontal levels. This is just me adding horizontal levels because I like these levels. Why do I like this level? Well, I like that level because price has reacted to that level. It's that simple. Like, people make videos and webinars on how to add horizontal levels. It's like, well, you like the level, have price reacted to the level, then add a line. That's it. Like, you like it, you add it. The reason why I like this one is because it's somewhat been used as, like you can see here, it's obviously being used as resistance here. It goes above, right? But then you have that wick kind of testing the lows. You see that this is just a perfect reaction to that level right here. You have a break and retest of that level here. You have nice reaction here to the lower bounds of that level. Nice reaction to the upper bound of that level. It's just a good level, right? So this is on the weekly. We're adding a few levels here on the weekly. Gonna be adding that one as well because that's a nice kind of like a nice breakout level on the weekly. And why not just add that level as well? I quite like it. Let's go to the monthly. What do we see on the monthly? Well, on the monthly we see that level is just a beautiful wick on the monthly. And we also added that around that level we added on the weekly as well. We're gonna add that level because honestly that level is obviously a very, very strong level on the monthly. You can go back, very strong level on the monthly. That's also where we're creating the wick right now as well on the monthly. So very interesting. We're gonna add this. We're gonna right here, we're gonna say monthly level. And now this type of analysis you don't have to do often, right? I'm looking at your USD here, obviously, and when you do this analysis and you add monthly levels, like those monthly levels, they can be there for a while, and maybe then, you know, with time, I recognize that that's a monthly level, and maybe I can remove that monthly level, replace it with a daily, weekly level, and it's just getting to know your USD. What are we looking at for your USD within this range that we're trading right now? Create a picture, right? Gonna paint the picture here. You know, technical analysis, it's more of an art than a science. So what we're doing here is we're basically, you yourself as sort of an artist, and this is your canvas, and you try to paint a picture of what is your USD doing now from a market structure perspective. So we looked at the monthly, we looked at the weekly, we're going to go down to the daily, and this is where we refine the levels. Look at that monthly level right here, beautiful on the daily. If for example your USD breaks this level to the downside, well, of course we're going to look for a profit target and a short down to that level. We're going to be trading level to level. Same thing, when price broke this level to the upside, we were looking for a retest of that level. Did it get the retest, but it broke that level? Did we get the retest of that level? Yes, we did. And then it started a beautiful trend here on Euro USD. So now going to current price, what are we seeing on the current price? Well, we're currently seeing a wick down, and let's add a horizontal level right there. And we can see that that's the low. That's the low of 2016. That's when Trump came into not into office. Trump came into office here, and that marked the low on Euro USD. Also, that was in December, and generally December is quite bullish month for EU. But you can see that you can see why I'm quite tempted in going long EU, and I'm gonna talk about why I'm tempted in taking a swing long on EU as well. We have a few levels here. That's a monthly level. We're using that monthly level as resistance. I believe this is an important level above as well. If we use that monthly level, kind of create a daily level based on that, and we go down to the 4 hour and we see that, yeah, this is a good level. I remember talking about this on Thursday. On Thursday, I talked about this in the Fiverr live trading room, and I remember saying that. So we have reclaimed that level, but really the level that needs to get reclaimed is reclaim these highs, because when that happens, we change the structure of everything here. And this is when we're going down into the time frames, like on the monthly, weekly, I'm just looking at levels. I'm not really looking at market structure or the trends too much. The trends is more important on the daily, and especially the 4 hour, because it's the 4 hour trends that I'm very interested in, but it's the high time frame levels that determine when I enter the trades and where I exit the trades. So looking at the daily here. Now, obviously, we want to also look at the daily levels in terms of structure. And this is the high. This is the last high on the daily. If we go down from here, we still have a downtrend on the daily. That's important to note. On the 4 hour, I would also argue that we have a local uptrend here. But remember, we have to always take into consideration the primary trend. What is the primary trend right now for Euro USD? It's still quite bearish. Why is it bearish? It's because we're looking at the range here on the weekly, and we simply broke below this range low right here. And on the weekly, broke below range low. On the daily, a strong move to the downside, and we have not really reclaimed any significant levels on the daily to be bullish on Euro USD. Now, I have not applied any of the systems that I've talked about yet. I'm still just looking at market structure. But where I can start applying the systems that we talked about is when I have an opportunity to trade with the primary trend. So let's look at that. Okay, let's add the slingshot indicator. Okay, so we can now see that price is above the moving averages on the 4 hour. We also bounced on the 50 EMA. That's nice. We got the 20 EMA about to cross above the 50 bullish cross, which is not a significant signal, but it's just it's something that we want to see. Wow, what happened with my voice? Okay, so now obviously, I need coffee, man. Thank you for reminding me. I'm gonna go grab some coffee. I'll be back in 10 seconds or 10 minutes, depending on what happens up there. All right, I am back. That was quick. Get that coffee. Oh my god, I love coffee. You know, the first cup of coffee in the morning. You know, there's two things I think about when I go to sleep. First thing is, I wonder if my position is gonna hit TP when I wake up, and I wonder how that first coffee is gonna taste. This is not the first coffee that I love. Who am I kidding? It's like 10th, 15th, something. Oh my god, it's hot. Oh, good god. Wow, didn't really plan that. No. Bad execution. Bad risk management. Okay, so what we have now is we obviously have Euro USD hitting a high time frame level, okay? We saw we have a big wick here to the downside. Now, the first thing I want to talk about is how can we apply the RSZ reversal and the RSZ method or the RSZ slingshot to this idea. Well, remember what we talked about. We want to see, the way I'm swing trading the reversal system is we want to see a move down to high time frame level, like this one perhaps, and then we zoom out into the 4 hour and we see perhaps a double bottom with a higher right leg, and that's the trade. Okay, so that is the trade, and for this trade we don't really have to have the EMAs confluent with this idea, because a lot of times when if you have a strong move to the downside, the EMAs are lagging. It's the average price. So if price moves swiftly down and it's way bigger move than the average price, of course the EMAs are going to be lagging behind, and a lot of times the EMAs won't be necessary in this trade. But when they are, you have a confluence, you have a reversal system in play and a slingshot system or setup in play. That's great. So looking at this, and of course, if you're going long here on a 4 hour reversal or a 4 hour slingshot setup, the daily EMAs are never going to be confluent. But what we have here in the 4 hour is obviously we got, let's assume that this is one move, then that's the up move, and then you have a move to the downside, and then you have a move like this. Now there's many different ways you can view this, but this is the overall direction that I'm seeing. I'm also seeing that we have within this trend, this move, we have something that kind of looks like this, you know, just like we have a trend here. What if price starts moving maybe down here again, and then starts moving higher? Now I would say that we have something that looks like a bottom formation, a break of structure. Now what is this pattern? We know what this pattern is, right? This is a head and shoulders pattern. Victor would say it's a Quasimodo pattern. I would have argued that there's no such thing as a Quasimodo pattern. I know you're going to be screaming, oh, what are you talking about? There's head and shoulders, and then there's head and shoulders with descending or ascending necklines. And a Quasimodo pattern is basically just a head and shoulders that's asymmetrical with a descending or ascending neckline. So for me, they're all head and shoulders, which makes it just more simpler. You know, there's just so many different names for all the patterns out there, and most of them are just the same principles. Like, what's the difference between a bullish engulfing candle and a bullish outside bar? Nothing. There is no difference. They're both engulfing candles, you know? So we have to not make it too complicated. It's nice, you know, if you want to sell courses, you know, you come up with a couple of new names for a couple of candlesticks, and then like, oh, look at this, the bullish triple donkey engulfing. Anyway, let's look at this, and we might look at this and we say, you know what, it does kind of have a move down like that. So is this Is this an engulfing candle? It is. No, engulfing candle, what am I talking about? It's a head and shoulders, right? With that being the neckline. And now, you know, when we add the moving averages, go into the 4 hour, and we could perhaps add a fib from that low to this high. And we see that price does come down, and it's a break and retest of a solid previous resistance area, been used as resistance at support. Comes out, breakout, hits that level, looks very good. Add the stochastic RSI. Now, stochastic RSI is still quite high. So I would say that, you know, obviously this is not the trade that you want to be taking, but this is the same type of price action structure that you want to see on the next move up. So now we can assume that price on the breakout might potentially come up and hit the previous highs, maybe a wick up here. And then you have a structure that looks like this. Breakout up to that level right there. Now, if we zoom out again, that's going to look like this. What you have is a head and shoulders pattern with a break and retest of the neckline. So what you have here is a combination of a reversal setup where you're also looking at high time frames, and a 4 hour you're looking for a break of structure in the 4 hour, and also a break and retest of the reload zone confluent with the monthly level. Remember, this is not just a local daily and 4 hour level, this is also a monthly level, massive level. You got the reload zone on the breakout level, you get that resistance. If you come down and hit this level and you have a bullish engulfing candle on the 4 hour, a pin bar candle, or just something that tells you that buyers are stepping in, taking control, then this is a trade that you want to be taking. It has now the confluence of both the systems. And then, of course, if you want to add your own ideas to this, you don't want to add your own, you know, indicators to this, then you're absolutely free to do so. Some of the indicators that I like, and some of the indicators that I'm working on when trading, you know, more discretionary and trying to find different confluences between the setups, that's the ADX. You have the ADX up here. This is a very good indicator to show the strength of the trend. You can, for example, like when the ADX is increasing in strength, it means that it's supporting the overall trend. Then we have the MACD, we got the RSI and the stochastic RSI. Another one that I really like, especially when trading crypto and looking at perhaps the futures market, that's the on balance volume. It's a really good indicator as well when it comes to looking at the strength of the trend. So I'm not going to go into great detail on these indicators. That's something I'm going to do within the community, within our mentoring calls, and really dive deep, because I have a lot of knowledge on these indicators. I know how they're calculated, I know how to use them, and all of the signals and everything that you need to know. But basically, the on balance volume is a very powerful tool, because what it does, it subtracts the volume from the days that are bearish and adds the volume to the days that are bullish. So on bullish days with increased volume, you'll see the OBV going up, basically confirming the trend, because that's how we're supposed to be using that's how we're supposed to use volume in our trading. Volume validates price. Volume confirms price. So if you see here, for example, this is like the on that candle right there, that big volume to the upside, and then you see that volume just start trading to the upside here while price goes up. And so it's actually a really good indicator to validate the price. And of course, with all of these indicators like oscillators, and this one, you could call this a volume oscillator, you want to look for divergences. Now, divergence is a very, very powerful thing that you want to be adding to your trading if you want to be using indicators, which is not something that I'm not using with the RL slingshot system actually. So that's an addition that you might want to be adding. Okay, so let's see. We got back to Euro USD. Now that's my overall idea for Euro USD, and let me walk you through my overall thought process here for Euro USD, and also talk a little bit about how you can apply other types of technical analysis in terms of more fundamental analysis. Let's see, how long do I have left? Okay, so I gotta pick it up here. Right. So we know that we have a possible break and retest of a head and shoulders neckline, which is just a break of structure. And again, you don't need to know the head and shoulders. All you really need to know, again, this goes back to what I'm saying with the basics of technical analysis. You only really need to know what a break of structure is and a break and retest to be trading this way. You don't need to know about the double bottoms or the double tops and inverse head and shoulders or the head and shoulders. That's something that I want you to learn to be able to identify market structure, not to be able to identify the patterns. The patterns are there to help you train your eye to identify breaks of market structure. That's really what we're looking for here. We're looking for Euro USD to break above that high. Either you buy the breakout or you buy the retest of the breakout level with confirmation with the RSZ slingshot. And then on the daily, we're looking at what levels should we be looking at for targets here. Well, we do know that we have a level. We have a level right here. Of course, we got I would say it's around this area. But the level that I'm really interested in is this level right here. I think this is one of the most important levels for Euro USD. I think that would be my profit target for this trade up here. So if I enter on perhaps the 4 hour with, let's say, a break and retest of this level, I want to have my profit target up here around this area. And that is a trade that's gonna probably could take up to a month, right? And I'll be adding to this position and moving my stop loss, just like I showed you in the example on Monday, or I believe on Tuesday. I showed an example on Euro NCD where we moved our stops up. So what I'll be doing with this trade is I'll move my stops up with every new higher swing low, and I will add to the position with every new slingshot signal or setup, while adding more to the trade when the more gets confirmed. So for example, if this level gets confirmed, I want to be adding quite a lot between this level and that level, because I think when this level gets confirmed, we're back inside the previous range, and I think it has a high potential of moving to range EQ. So I want to be adding one position here. It moves maybe like this, add one here, reclaim that, double the position here, and maybe add a little bit here as well, and then move stops up with every swing on the 4 hour. This means that I'm increasing the profit on the profit potential of the trade while decreasing the risk potential of the trade. Adding to position like that is something that I think you should be careful with in the beginning. That's something that you will learn with in time. And again, you're not going to become a profitable trader after just watching these webinars. Okay, like just going through this technical trading workshop, you're not going to become a profitable trader with that. But you now have a foundational basis to build on. What I would recommend is when you're trading this system, I would recommend you keep it simple and just use and I also recommend that you do add more fibs, because I want you to create something on your own, not copy me. And when you're entering perhaps on this retest, why not just take profit here? If you're seeing a 2 hour trade when you're entering here, why not just take profit here? And then if you have another move like this, enter here, take profit here, you know, learn who you are as a trader, you know, and trade that way. Right, so now let me this is a good question. I will cover that question. Actually, I think we can pivot into this right now. You don't expect. Okay, that's a bit too big. The question is, you don't expect USD strength in terms of Trump election. Well, you know, if we go to the dollar currency index, which is the dollar, I mean, what we're seeing right here is dollar strength, and we've had 1, 2, 3, 4, 5, 6, 7, 8 bullish weekly candles for USD. Here we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. The and look at the weekly candle right now. Look at the weekly candle right now. This is obviously quite massive, okay? Now, obviously, we have quite a long time until this weekly candle will close, but still, it's a bit. So, am I expecting dollar strength? Yes, I was expecting dollar strength, and we got dollar strength. I traded dollar strength from this retest to this rejection. Remember, we caught one of my best trades, you know, this year was the short that we took on Euro USD because I was expecting dollar strength because of Trump. And that was this trade where we went basically short on that 4-hour bearish engulfing candle. My initial stop loss was here, and then I believe I had my TP somewhere around that area. Now this is it's more than 300 pip move to the downside. And I had one position here. I added on the position here, and I added on the position here with moving my stops down. So I made quite a lot of money and a good trade on dollar strength with that. So am I expecting continuation of the dollar strength? I'm not expecting anything, but I have a couple of ideas. Now, one of the ideas that I had for dollar strength and this is kind of where we go a little bit into how can we do macro analysis as technical analysis, or how can we do fundamental analysis as technical analysis. Now remember, what is fundamental analysis? So technical analysis is when you look at price and you look at patterns in price. Fundamental analysis is when you basically look at patterns in things that are happening outside price, fundamental happenings like geopolitical, you got situation going on around the world. If you're trading the stock market, for example, technical analysis is price, fundamental analysis is doing research on the actual company that you're buying, and if it's undervalued, you want to be buying. If you get information that a company is going to, you know, start producing more products and start making more money and the value is going to go up, you're going to be buying that for fundamental reasons. So how can we make fundamental analysis using technical analysis? How can we look at price graphs but still do fundamental analysis? Now, of course, it's not purely fundamental analysis, but what I did, for example, is you can go to a chart like this, and this is about finding patterns in price or what price have done in certain situations. So we have the elections in here. So below here, we have the election in 2016. This is where Trump officially got voted in, right? And he won the election. You then see that the S&P being the red one and the dollar currency index being the blue one, you see it's correlated. This does not happen very often. The correlation is supposed to be negative. A lot of times when the dollar goes up, equities goes down. Dollar strength means usually risk off, because the dollar is a safe haven asset. So when the world gets riskier, people flee to currencies like the dollar. And when it's a more safe environment and people are ready to put on risk, maybe it's a low interest rate environment and there's few geopolitical risks, money becomes cheaper. You can borrow money, start businesses, invest in the stock market, whatever. Equities goes up while dollar goes down, because you're not getting as much interest by holding US dollar, right? And it's a safe environment. USD is a safe haven asset, which goes up usually when equities go down. Here we see a positive correlation between the dollar currency index. We see a positive correlation between dollar and the S&P 500 between election and inauguration. And then if we go here, after inauguration, you see that it's a cross, right? The dollar goes down and the S&P 500 goes up. This is a normal correlation. This is usually normally what happens. And this time around, this is 2024. And if you look at 2024 here, you see that the S&P 500 being red goes up while the dollar also goes up. Now, this correlation is not true all the time. You can see in this is not perfect, but it generally did hold true. And this was the idea that I traded on. Now, I'm not so sure that that idea is valid anymore. And I'm going to show you some other things that I'm applying to my fundamental analysis. You can, for example, look at something like the yield spread. Let me see if I can find the chart for that. So just give me a second. Where did I have that list? I did create that list. Okay, so basically what you want to look at is you want to look at, so the idea behind this is to look for potential divergences between the 10-year German Bund and the 10-year US bond market, and you look at the yield spread between them, and you try to come up with an idea of possible divergence between the interest rates in the European Central Bank and the American Federal Bank. So the way you do that is you go into TradingView. Let's look at, maybe I have the, all right, so it's going to be this one, right? So what you do is you look at, you go to TradingView and you type in DE 10-year minus US 10Y, and that gives you the yield spread between the German Bund and the US. And then what we can do here is we can apply, and this is just one thing that I'm doing when it comes to fundamental. We don't really have the time to talk about all the details of this today, but I will be continuing, of course, within the community, within the mentoring sessions as well, starting next week. So adding the Euro USD here, what do you see? Well, I think it should be quite obvious to everyone that the correlation here between the Euro USD chart and the yield spread between the 10-year German Bund and the 10-year US Bund is quite obvious, okay? And we are seeing somewhat of a bottom being put in here. So it does kind of align. Now, sometimes you'll see a front running in the yield spread, and this is quite interesting. Right here, look what happened here. This is a divergence, right? Because you see that right here, you're breaking a support level, okay? We have a support level right here, and we're looking at the blue line right now. Right here, it's breaking down. So first you have a top being put in here, top on the yield spread, a top on Euro USD. The yield spread breaks this level right here, while Euro USD continues to trade higher. That's a deviation. That's a divergence. And when the yield spread breaks this support here, Euro USD is actually creating a top. You can look at this and say, wait a minute, what if I just short Euro USD when the yield spread breaks down? Well, that's actually where you would have timed the absolute top on Euro USD, okay? Remember, I shorted Euro USD here to here for a 300 pip move to the downside. Shorting the very top down to that level would have mean a 600 pip to the downside. So what you're doing here is you're still doing technical analysis, but you're doing technical analysis on assets that are highly correlated to fundamental events and decisions. The yield spread here is obviously pricing in the 10-year yield spread for the Bund and the US 10-year, which means it's heavily affected by the ECB and the Fed interest rate decisions, and which of course is in turn influenced by the overall market conditions. So this is some of the things that you want to be looking at, right? Now you can also look at this, the yield spread between other countries and other forex pairs, of course, with other some of the major currencies. So that's some of the ways that I like to look at that. And of course you can do just look at the correlation between the dollar currency index and Euro USD. So if you look at Euro USD here, for example, we are potentially moving in a bullish direction, but it has not really broken the structure. But if you look at the dollar, it has broken structure on the daily. It had a gap down here as well on the dollar, but it has broken structure. This is now a downtrend. It broke structure. It's not a downtrend on a daily, but it broke the local structure at a daily level. It's now a 4-hour downtrend. And if you look at Euro USD, it has not broken. Euro USD has not yet broken the daily structure, while the dollar currency index has done so. So you have got to ask yourself, which one is front running the other? Is the dollar going to continue higher while your USD is getting rejected at this level, or will the dollar continue lower and your USD is lagging behind? Now, these are the things you should think about when you're starting to think about the macro perspective. And then there's a couple of other things that I want to show you here today as well. Before we go in briefly on the trading psychology bit, I want to show you a couple of sites that I like to use in my trading. So one of them is this one, which is I think it's PIQ or PIQ, probably pronounced PIQ. I gotta remove myself here so you can see the whole screen. So this here is PIQ, where you can see that we have, it's a good, so for me, I have this up on one of my screens, right? That's better. Yeah, so I got this up on one of my screens, and I can, we have the economic news calendar here. We have a Bloomberg TV up here, which when I'm not recording videos or watching anything else, I like to have Bloomberg TV up. And then you have the routers, like a news feed for routers, and then you have a news feed for Forex Live, and then you have PIQ's own feed here, and then you have News Squawk. I got a free version of this, so I'm not I don't have the full version. So the News Squawk here is 30 minutes late, which is obviously might update this one. And then you have the News Squawk tweets as well. So this will give you an interesting overview of the market. So I recommend you check this out, or previous tools if you are if you're trading, if you're swing trading, you're in the markets and you're doing research and you want to go into the fundamental analysis of what's going on, and you're not just looking at technical analysis. You want to have tools like this. Now I do highly recommend that you learn your technicals first, but if you feel like this is fun, like researching fundamental analysis, looking at what's happening around the world, if you feel like that's something that you enjoy doing, then maybe you're someone who should be trading based on fundamental analysis. I do recommend that you try it all out. Try technical analysis, try fundamental analysis, and then find your personal style in trading. Like I'm very good at technical analysis, and I want to teach you technical analysis, but I can't teach you technical analysis if you don't like technical analysis, okay? So try it out, try everything. Now, the best combination and the best traders, the best traders are the ones that combine technical analysis with fundamental analysis. And the best trades that I've ever had are the ones where I have the fundamental bias to give me the confidence needed to be long on a good setup. Like I get a long signal from an RSI slingshot, and it aligns with my macro analysis, and it aligns with the fundamentals, then I can go in with size. I can increase risk, and I can continue to add risk to that trade if it looks good from a technical perspective. Maybe it reclaims a new level and the fundamentals have not changed. Another website I want you to check out as well is Financial Juice. I will show you what that looks like right here. That's this one right here, financialjuice.com. It's also good because I like how they're bringing up the the breaking news in red like this, and it's also bringing up the here, for example, this is the German employment rate, and it says that it came out as expected, and then how the unemployment change came in lower than expected, and then whatever news here, and then you have the need to know market risk here as well. So reading this will give you a good understanding of what's going on right now in the markets, and that might help you to take trading decisions. Another one I'm looking at is the Trading Economics website, tradingeconomics.com. They have a very good economic news calendar as well, and they got a few good breaking news articles here as well. And then of course we have let me pull up TradingView here quickly. I'm going to log in here. I don't want you to see all my logging information. This is SeasonX. On a free trial, got 19 days left. Do I want to pay $42 a month for this? I'm not sure I do want that, but I am tempted to do so because it has strong potential. It has like a 30-day trial, so I definitely recommend you do check it out. Now, something that really aligns with my long idea on Euro USD is this seasonality graph right here. So I would say that the fundamentals is not really backing this up. So right now, for example, we have a central bank divergence between the European Central Bank and the Fed. So the Fed is a little bit more cautious in lowering rates, which means that would give a push to the dollar to the upside. While if you look at the European market, it's absolutely trash. Like the countries are just, it's a dumpster fire from an economical point of view. The UK is catastrophic. France has potentially entered, gone below the level of the threshold of recession. Everything's just going to shit basically in Europe, while America is just partying, right? So there's a divergence there, right? So fundamentally, you might not want to long the euro versus the USD, but from a seasonality point of view, you absolutely want to go long your USD this time around. And what if what we're actually seeing here on Euro USD, I mean, we are potentially printing a bottom. So if the technicals confirm this, and we have the seasonality data to confirm it, and we potentially see a shift in the fundamentals, then I will be piling into longs on Euro USD to ride this trend that I'm hoping will last throughout December. Now, it might be that the move that we've seen here is basically just pricing in what will happen 6 months in the future, right? So what's happening right now is usually traders pricing in what they think will happen in the future. And what do we have in the future? Well, that's Trump coming into office. And they're potentially pricing in what will happen when he comes into office. And I think that's probably what we're seeing. And I feel like we should be seeing a reversal on Euro USD. Okay, so that's basically giving you all, like, these last 4 live streams should have given you a very good overview of the way I'm trading and the tools I'm using and how I'm approaching the market. And I want to briefly touch on trading psychology as the last thing here before we end this. And by the way, the giveaway and everything, make sure that you sign up using the link in the description below. Tomorrow I'll send out the giveaway link, and on Monday I will be drawing the winners. Also, on Monday we will be increasing prices, and the Black Friday deal is ending on Monday, and potentially also, depending on how many people get in here today, I'll be potentially closing down RL Set exclusive for any new subscribers, because I want to make sure that I can take care of everyone and give everyone the time needed to really get funded and really become traders for real. Trading psychology. Let me get some coffee. Is trading psychology the most important thing in trading? Apart from risk management, I mean, risk management is, I wouldn't say risk management is important. I would say that risk management is trading. So if you're not using risk management, you're not trading. You're just gambling. So let's assume that when we talk about trading, you know about risk management. When we talk about trading, you are using risk management. And in that case, yes, trading psychology is the most important thing. And there's 2 books that I want you to read if you haven't read them already, and that is Trading in the Zone by Mark Douglas, and then Best Loser Wins by Tom Hoggard. I'm Swedish, I should know that it's pronounced Hoggard. Anyway, those books, read it. That's going to give you everything you need on trading psychology in terms of the details and the practical applications. But what I want to leave you with here is your mental edge is going to be your most important edge. Your technical edge will change. It will deteriorate over time. The system that you're trading today will not be profitable in 10 years. Everything that you do in the market will change. The market is ever evolving. You're never gonna, like, your technical approach and your fundamental approach, it will change. Trust me, you're not gonna have the system you're trading today in 5 years, or maybe even 2 years, or maybe in 1 year. What will never change, though, is human psychology. We've basically been the same since the dawn of time. Since we were running around in our caves, doing whatever we did back in those days. We're the same. We're all the same. And that's not going to change in the next 5 or 10 years. You need to develop your mental edge. And what you need is, you need one of these. I don't care if you, maybe you can have a digital as well, but I strongly recommend that you just get a piece of paper Get a pen, get a piece of paper. I don't care what it is, napkin, whatever. Start writing. Okay, start writing. When I started trading and when I started realizing the importance of this and developing my mental edge, I wrote every day, multiple times every day. I write like once a day now, but back in the day, like I wrote a lot because I wanted to know, what am I feeling? Why am I feeling this way? And in what scenario should I be trading? Should I be trading when I'm not feeling, happy? Should I be trading when I'm angry? Should I be trading when I'm tired? Should I be trading when I'm euphoric? Like what's my optimal mental state of mind? And that's that optimal state of mind, also called flow. That's when you want to be trading. Any other scenarios, do not trade. Now, a lot of people think that you should just be pushing through. When life gets tough, just push through, which I do agree with in a lot of cases, but not in trading. When you're in a drawdown and it's just the worst thing ever, take a break. You're not supposed to be trading if it's the worst thing ever. Profitable professional traders, we trade when it's effortless. Like, I'm not going to put on a long position on Euro USD if I'm hesitant. If I, like, for now, for example, like, I want to long Euro USD because I see that the seasonality pattern is there. I love the level. It's, I want to go long on Euro USD, but I'm hesitant because I don't have the fundamentals backing it up. And the technicals are not really confirming. So I'm not going to be trading because I know that that's not my optimal mental state of mind. The optimal mental state of mind is when I'm completely calm, everything aligns, everything's perfect, and I'm completely calm, and I don't really care about the trade. It's like, yeah, you know what, I'll take this trade, but you know what, it's a winner, it's a loser, I don't care. It's going to be boring, it's going to be effortless. I'm just going to get into the trade, add positions, add a couple of levels, add a couple of alerts, add some notes to those alerts with instructions on what to do when the alert goes off, and then just walk away. If I feel like I need to get my phone up and check the position all the time, I'm in the wrong trade. Or I'm in the right trade, but I've entered it because of the wrong, in the wrong mental state of mind. So this is, you can read all the trading psychology books you want, but what you really need to know, or need to do, is you need to look within yourself and really ask yourself, what type of person am I? What type of trader am I? What type of trading style do I need to have to be in conflict with that personality that I have? And how am I feeling during certain stage of the trade or during certain stage of my trading? And what is the most optimal way for me to feel when I'm trading? I'm not saying like you should just go around and be happy all the time and be super euphoric, but you need to know that you need to be in that state where you're not panicking and you're not euphoric, you're just in the flow. And it's very difficult to describe what that feels like, but it shouldn't be too difficult. It shouldn't be too easy. It should just be effortless. And if you feel like there's any type of conflict with your technical setup and your willingness to take the trade, or you're hesitating, take a step back. You're not supposed to be trading in that period. And you probably don't know what that is at this point. You probably don't know what your optimal mental state of mind is at this point, but you will know in a couple of weeks or maybe a couple of months if you start writing in a journal. If you don't write in a journal, good luck. You're never going to be profitable. Okay, if you don't figure out your mental edge, you're never going to make it in the industry. That's a fact. You're never going to be long-term profitable. So if you're serious about this, get serious with what I'm telling you right now. Like, you have to develop that mental edge if you ever want to become profitable. All right, guys, that's it for today. Hopefully, I really hope that these sessions have given you something useful. I really do hope that, because what you've given me is time. You've given me your time, and that is, I'm forever grateful for for that, because if it's something that we do not have more of, it's time. The time that you spent on this week and these live streams with me is time that we're never going to get back, and it's the most valuable asset that you have. You can always get more money, but you can never get more time. So I'm highly appreciate you taking the time and joining me here for these live streams, and hopefully the time that you've spent on this will help you become a better trader, so that you will have more freedom and more time freedom to spend that time on something that you love doing. That's the whole idea with RLZ trading. All right, guys, thank you a lot for joining, and I hope to see you all in the community. And don't forget, I'm talking a lot about the RLZ exclusive as the paid community. It is also a free community. You can join it for free. I'm in there. I'll help you out. Just get in there, and I hope to see you all within the community. All right, guys, take care. And any questions, I will be in the Discord. Thanks, everyone. Take care.